Welcome back. You're still tuned into Mid-Cap Radar on CNBC-TV18. Well, Arvind reported what was a good set of Q2 numbers. Steady growth continued despite tariff headwinds. We have with us Punit Lalbhai, who's the VC at Arvind, now joining in to discuss the performance. Punit, hi. Welcome to the show. Well, that is the big question then. This was a quarter where you did see the US tariffs impact business. Just give us a sense in terms of what the impact was on the P&L this time and how are you navigating the tariff issue?
So yes, you're right. It is a very challenging market currently because most of the tariffs have now kicked in. However, the mitigating factor has been a very strong push on cost and efficiency, which has sort of offset the tariffs. And in lieu of discounts, we have shored up volumes with our customers. That's been the other positive. So we are sort of slightly under pressure on margin, but we are making up for that through volumes and efficiency.
So you have around 25% of your sales going to the US, and that's a majority of the impact in terms of margins is coming in from there.
Correct.
Okay, Mr. Lalbhai, on a quarterly basis, 25 to 30 crore hit. How much of that can be offset by the India-UK FTA? Are you seeing increased traction on that front?
Yes, so the groundwork for shoring up volumes there is ongoing. However, it's a much smaller geography, so one has to be sort of realistic in how much volume can come through the UK FTA, but up to 10% of the company's volumes we see in the future, up from the 4-5% that is now. So we can essentially double our UK business going forward. Of course, the benefits of the UK FTA will get implemented only next year.
Are you, are you indirectly exporting, say, via Bangladesh and other geographies such as Sri Lanka into geographies such as the US?
Yes, we are, and that would be almost 50% of the overall US exposure. So in addition to the about 20% direct exposure, there would be another 15 to 20% that would be through other geographies. That is not as badly affected. However, even there, because the tariffs have been rolled out, though at lower levels in these other countries as well, there is some pressure to pass on further discounts.
Okay. Mr. Lalbhai, the other thing want to understand is, especially when we look at the three segments, denim, woven, as well as garments, the order book in all three of the segments is pretty strong. So H2, do you expect better volumes? But you also mentioned that, there is realization pressure. So what is the kind of realization pressure that you're witnessing, and what can be the volume growth?
So we expect that we'll be able to make up in terms of efficiency what we lose in terms of realization.
Okay.
And the second half of the year generally is more buoyant in terms of the business cycle. So we should see good volumes. At least in Q3, we have a very healthy order book going forward.
Are you seeing a structural shift from your clients to other geographies or to other, other businesses in order to mitigate the impact of the tariffs?
Well, the big structural shift is the move away from China. Okay. And any other structural shift is tactical at this point in time. So okay. I would expect the India volumes to remain intact if all else remains equal, unless, of course, it becomes clear that we are never going to have a trade deal. So right now, people are expecting that there will be a trade deal at some point in time, even if it's a couple of quarters down the road. And people are keeping the faith in India so far.
But are you curtailing capex in lieu of this?
We had done so at the time when tariffs first hit. However, it is becoming clear that we will be able to mitigate the impacts of those tariffs as things stand today. So we have resumed cautiously capex because there is good demand both in the US and in other geographies, and especially in India. So we cannot completely sort of abandon increasing capacities where they're needed.
Understood that. Mr. Lalbhai, talking about the AMD business, almost 15% year-on-year growth, guidance in the range of 18 to 20% growth. What are the segments that are seeing traction? Any segments is witnessing slowdown? And how much of it is due to the new defense orders?
So the defense is still quite a small part of the overall revenue, though we are quite buoyant about that segment going forward. If you see, the composites and the industrial segment have outperformed this quarter. There, the impacts of the tariffs have been rather minimal. The human protection business, which is the largest segment out in the advanced materials business, is the most affected by tariffs. There also, we've seen a growth, but we've seen a little bit of margin pressure in lieu of the tariffs.
Okay, all right. Well, we wish you luck. Punit, thanks very much for joining in and speaking with us. And we'll touch base when there's little more clarity with regards to what's happening on the tariff front with India and the US. Well, on that note, that's all the time that we have on Mid Cap Radar. Your stocks once we're back. Stay tuned.